Nvidia outsources the manufacturing of its products to Taiwan Semiconductor Manufacturing Company, which in turn buys equipment from ASML. Nvidia arguably has over 80% market share in the AI accelerated GPU industry. ASML has a similarly large market share in its highest end products, which arguably have no competition. But which one is the better AI stock to buy today, Nvidia or ASML? I'll answer that question in this video, comparing the two stocks on revenue, profit margin, cash flow, the prospects going forward for the next 5 years, and valuation to determine which one I think is the better AI stock to buy today. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with revenue growth, you'll notice that Nvidia and ASML had similar rates of revenue growth over the last decade. That is until the last year and a half or so, when Nvidia absolutely exploded. You can see that on the chart here, jumping from revenue growth rates that turned negative in 2023 for Nvidia to 262% in the most recent quarter, and Nvidia expects similar rates of growth when it announces its quarterly earnings update on August 28th. Meanwhile, ASML was negative 10% in its latest quarter, and management told investors that 2024 revenue will be flat compared to 2023. However, ASML management informed investors that 2025 would be a strong year, as many of these new fabrication facilities that its clients are increasing will need ASML's products, and they've already contracted for ASML's equipment. So that's going to deliver a strong year for ASML stock investors in 2025 and beyond, to be frank, because there's been a widespread announcement of increasing manufacturing for semiconductor facilities for two reasons. Number one, to diversify away from Taiwan, where there's increasing geopolitical tension, and secondly, to benefit from the increasing demand for semiconductors because of the rising effectiveness of artificial intelligence, the Internet of Things, and the electrification that's going on worldwide. That will provide a tailwind for ASML as well as Nvidia, which will benefit from that trend. Similar story when we compare these two on the operating profit margin. You'll notice they've been similar over the last decade, and Nvidia jumping ahead in the most recent periods, 59.84% in the trailing 12-month period for Nvidia, while ASML generated 30.66% in operating profit margin. What you'll notice for both of them is a rising operating profit margin over the last decade. Nvidia started the last decade at a 15% operating profit margin, where ASML was at 20%, and they've both increased nicely in that time. Looking ahead, the analysts on Wall Street that are following Nvidia stock expect it will grow its earnings per share by 46% per year over the next 5 years. That is a robust rate of growth for any company, let alone a company the size of Nvidia with a several trillion-dollar market capitalization. For ASML, the growth rate is more subdued. The analysts on Wall Street that are following ASML stock expect it will grow its earnings per share at 22% over the next 5 years, and they expect this will grow in a choppy fashion, with 57% earnings per share growth happening next year, but only 22% happening over the next 5 years. Now remember, nobody knows what's going to happen in the future, not even the Wall Street analyst. They can use the best information they have at their disposal to make these forecasts, but these forecasts are not always precise, they're not always accurate. So take it for what it is: an estimate, a forecast that uses assumptions and several numbers that may not prove to be precisely accurate. The next thing I wanted to compare these two on is the return on invested capital. This measures how good these two are at taking investor money, investing it in products and services, generating profits for shareholders. Now you might say, well, these companies don't take money from investors. How can this metric be calculated? And the answer is they do take money from shareholders, but it's in a unique way. When a company generates profits and they don't return all of the profits to shareholders, which ASML, Nvidia do not do, they don't return all of the profits to shareholders, they retain some of those earnings and reinvest in the company. That's essentially taking money from investors and putting it back into the company. And if they're not good at that, then investors will start protesting and telling these companies, stop keeping your profits and reinvesting in the business. Just give it back to us because you're not doing a good job of investing these profits back into the business. We need you to just give that money back. But that's not the case with these two. They both have excellent ROIC. Nvidia, of course, being the best here at 93.75%, an incredible ROIC, one that I suspect is not sustainable for the very long term. ASML with a return on invested capital, which is also very good at 38.6% and is also more sustainable for the long term. And I wouldn't be surprised if ASML's return on invested capital trends higher over the next several years, while Nvidia's return on invested capital comes back down to the 50% range over the next 5 years. I also wanted to look at cash flow from operations to sales in a trailing 12-month period. And here we see some differences here. You see Nvidia beating ASML with 50% compared to 19.61%. And you see a big downturn for ASML here, which warrants some explanation. ASML, remember, entered into a cyclical downturn in early 2023 and is just now coming out of it. They're expecting to come out of it in 2025. But the company, because they have a close relationship with their customers, the company understood that demand is going to rebound and they invested in anticipation of that rebound. So because they invested in anticipation of that rebound and their sales were sluggish, that created a dip in their cash flow from operations, which is very likely to rebound in 2025, which management told investors to expect with a very high likelihood because their relationship with their customers, because they have relatively fewer customers, they understand where demand is, where cash flow is going to come from, when it's going to come. And so they can give forecasts to investors with a higher probability of likelihood than most other companies can, because most other companies have very, very, very many customers that they cannot maintain such close relationships with because there's just too many. And finally, I wanted to compare these two on valuation. And I chose to use the forward price to earnings ratio. And according to this metric, Nvidia is trading at a forward PE of 33.64 compared to ASML, which is trading at a forward PE of 28.24. Now, given what I know about these companies and given what we looked about according to these comparisons in this video, Nvidia is the clear leader, right? You noticed several of the metrics, Nvidia far outpacing ASML. Even looking ahead over the next 5 years, Nvidia's earnings per share growth is expected to be double that of ASML. And it's only trading at a small premium to ASML. So for me, if I had to pick between these two, I would pick Nvidia as the better AI stock to buy today. But I like both of them. I have ASML stock also rated as a buy. So if you don't have to pick one, then don't. You can buy both. But if you have to pick one, I would pick Nvidia. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.